Alright, top 10 mineral stocks according to ChatGPT. Here are the top 10 mineral stocks to consider for 2024. First off is Vale. Vale SA, that's the company. Here's the ticker number. And we can just start by looking at the overall increase. So it started in 2002 in March, and it's had some spikes. 2008, okay, well, that was during the bubble, one of the recent bubbles, that is, in our lifetime. And let's look at the financials. So the total revenue, and we'll take the total revenue and we'll look at the total expense and just compare those and see what's going on. So that looks pretty good. We can go, that's annual, let's just leave it as annual. So just looking at the income statement for the total revenue and the total expense, got just a little under 20 billion, because this is in the thousands. The number is in the thousands here. So 19 billion 956 million dollars in 2020 as of the last day of the year, and that's not too bad compared to 39 billion 545 million dollars in total revenue. So, you're making about 20 billion revenue if we just look at these two aspects here, and we can see it does inch up. We go from 19 to 25 billion in total expense, which is what you'd expect for something that's scaling up anyways, and that's $6 billion increase approximately, with, well, really a $2 billion increase, but it's still well over the total expense, so that's not terrible, I'd say. We can look at some other things on there. We can also look at the balance sheet, which I think is pretty important. I'm going to make this kind of quick. We'll just go over the total revenue and the total expense. We might take a look at some blogs regarding them, but other than that, we'll just keep it pretty basic. So the balance sheet for Vale SA is, and I'm going to pop that into here so we can take a look at it in a bit. The total assets has increased by 2 billion from 2020 to 2023. That's what we have an insight of here on Yahoo Finance. Total assets. Total debt is 16 billion as of last year, at the end of the year, which is down. So I like seeing that. It went from, in 2020, so 4 years ago, it was a 19 billion total debt, and it's gone down to a 16 billion total debt, which that looks pretty good. There's a lot more to unpack than these really basic things. I'm not a financial expert, I'm not an economist or anything. I'm just interested in this, and I read this stuff, so I thought I would read it with y'all. So that's what we got here. Not too bad. Again, I would just check out Yahoo Finance if I was you. I can put all of these links in the description. So what I'm going to do is I'm going to open up a handy dandy notepad here, and we'll get the income balance and the income sheet, or the balance sheet and the income statement for all of those. We'll just put those in the comments, but you can just go to Yahoo Finance or finance.yahoo.com and you can search for them, or if you're a little smart, you can just put this and then just change the ticker. but it is helpful if you don't know the ticker. I mean, you can look for the company, I'm pretty sure. So there we are. That's Vale. That's number 1. Just gonna see how much time we've been ticking on here. Okay, great. I have no idea because I'm using OBS, and that's all right. So the next one, and oh, you know, we should probably figure out what is what does Vale even do? It says a leading producer of iron ore and nickel. Vale has strong fundamentals and a positive outlook for growth, which I would agree with, looking at how they're dealing with their debt, which has gone down, as you can see here. It's gone down by, what did we say, $2 billion over the past, okay, no, it's gone down by $3 billion, approximately, a little bit more than that, over the past 3 years, because this is to 2023. Now, their total revenue hasn't really increased much. There was a spike in 2021. For whatever reason, did their total expense go up? Yeah, I mean, it did. It looked like they were maybe expecting more growth here, and then they just kind of, I don't know, the revenue went down for whatever reason. We could probably look this up. You know, here, let's take a look at Vale for 2022 here. See if there's any information, announcements. Do they have announcements on their website? That would be nice. Integrated report that they have. Is there anybody else talking about them during this time? No, I don't see anything that stands out. And this is just okay, we're not going to read through this. We're going to keep it sweet and simple. Okay, so moving on to the next one. It's a Lithium American Corporation. OLLAAC. I actually have some of that. I might check out this Vale another time, but right now, I'm going to not do that. So yeah, Lithium Americas Argentina Corp. Right, that's why there's 2 A's. So if we look at their stock price, so it started in, at least it was public in 2008, and it was pretty. You know, had a little bump on 2010, 2011, 2018. It started ticking up here, probably because there's a lot of talk about, you know, lithium's good for batteries, right? It's one of the components in rechargeable batteries, lithium-ion batteries, right? The lithium and other parts. I think it goes to other computer parts as well. It spiked up for, what is this? 2021 spiked up, 2022 spiked up, and then just kind of trickled down to where we're at, which is still higher than the position was when it started, even higher than its high of 2010 and 2011. So, not bad. But again, we are going to look at the financials to see where that's at. So the operating expense, okay, yeah, so some of these on Yahoo Finance are different because whatever the company is, they just don't adhere to the same standard or whatever reasons. I'm not entirely sure why, but we can still get an idea of what is going on with them. So the total expense has increased, which again, you could expect if they were expanding. The total revenue, I am not seeing anything for that, which makes me think they don't have a revenue, which is interesting. We could have looked at the cash flow too, but we'll just look at the total assets. Oh yeah, and the total debt, let's look back at that. The total debt here is 32 million, because remember it's in thousands. 32 million, and it's gone up by like 20 million. Net interest income, normalized income. I mean, okay, so that's pretty telling right there. Maybe they're using a different word instead of revenue. They're calling it income, but as you can see, it's in the negatives. It's less negative than it was in 2020, but still, it's negative. So they're making negative income. A lot of negative income. I mean, like that's $34 billion negative. Then this year it's $11 billion, and we're only halfway through the year, so I don't know. Balance sheet though. So the total assets has increased. You know, and assets doesn't necessarily mean just cash. It's a bunch of stuff. You have to look into what it is. I think which cash. Okay, so cash equivalents, that's stuff that they can kind of sell off. Usually it's the liquid stuff typically. So that's, I mean, that's not terrible. And then the total debt. So they're staying afloat as far as their total amounts. Their revenue is not great. Not really sure how they're pulling that off, but they are. And maybe they have a weird way of doing their accounting. But yeah, their total debt's gone up, but their total assets have gone up quite a lot. It went, 2020, 326 million, and then now here 2023, just last year, $1 billion. And the debt has only gone from 124 million to 202 million. So really keeping that debt in check, that total debt, which is good. But obviously there are ways to kind of hide stuff, I'm sure. So let's look at Teck Resources. Teck spelled with a CK. Interesting. Oh, and yeah, so Lithium Ion. Lithium Americas Argentina Corporation, LAAC, this last one. This company is a major player in lithium production, a critical component for electric vehicle batteries and renewable energy sources. I mean, like all kinds of things, UPSs, computers, like laptop computers, laptop batteries, phone batteries, all those kinds of rechargeable batteries. And let's look at LAAC for a sec here. Okay, not that. Lithium. Is there anything that jumps out here? No, not really. I mean, this is people just talking about it. Yeah, okay, we'll do another type of in-depth analysis on something like that another time. But not today. Not today, Junior. I really need to get a clock for this thing. I have no idea. Okay. We're 12 minutes in, it looks like. That's not terrible. Kind of want to make this a little shorter. Maybe we'll make this, instead of the top 10, we'll make this the top 3. But I'm just going to keep going and we'll see what's up. Alright, so yeah, all time started in 2002, July. Cool. That's when they were public. And honestly, not that bad. They spiked up here in 2007, 2008, dropped way down when a lot of people were dropping down. 2009, 2010, picked right back up, and then kind of trickled down 2015, and then picked back up. They're having these kind of nice ups and downs, which is typically not that bad in my opinion. It's kind of weird that it hasn't continued up. It's kind of goes down and then comes right back up to that same $50 price. About its highest wasn't even 50 actually. Okay, no, it was 61 in 2010. So I mean that's fine. We'll take a look at the financials, see why that is, and there's a lot of good reasons to or not to use something, right? Dividends, growth, they can be the same, they can be together, whatever. Okay, so now another one that's normal, in my opinion. It says total revenue here. With 2020, 8 billion, almost 9 billion, right? Because it's in thousands. And then jumps up, so this is total revenue. This year, that's actually pretty dope. So, I mean, maybe all their sales are in the first half of the year, but I'm pretty sure, unless I'm misunderstanding what TTM is. Let's just look at what is TTM. TTM, Yahoo Finance. No. Okay, that's not helpful. Not Tata Motors Limited or whatever. Okay, meaning it has to be trailing 12 months. Okay, so earnings per share is usually abbreviated as EPS, and the TTM that follows stands for trailing 12 months. This means that the EPS, TTM, is the total earnings or profits for the company has made over the last 12 months. So, Okay, so it's really just between this time, okay, since June of last year. So yeah, it'd be nice if they had a different measure that just started at the beginning of the year. But that tells me if last year they made 15, they've made at least 7. So okay, I guess that means that they're probably on target to make another 15 billion in total revenue. You know, unless they just have a really good rest of the year. If I'm understanding what TTM is representing here, but that's I mean, that's pretty good. Let's look at the total expenses. Yeah, it's that looks good. Now I feel like I have read that there is total expenses is one thing, but then there's another bit that comes into it to tell you, you know, it's like amortized debt, but maybe not. But yeah, so they slowly gone up in debt. So they were right on the edge, and they're still pretty close to it. So you know, in 2020, it was about 9 billion, just a little under their total revenue. So 8.9 billion, 8.948 billion, right? Total revenue in 2020, and in 2020 they had 8.542 billion in total expenses, and it actually went down in 2021 to 8.1, and then up to 10.128. But I mean, they had a pretty good year. That's the highest revenue they had, 17 billion. And then for the past, last year, 2023, is 15 billion, and this year again it's probably on track to do another, maybe 14. I mean, yeah, 14, 15 billion. And the total expense has gone up, which tells me, without digging into it, since there's not a whole lot, not reading newspapers, they're probably hiring more people, investing in other technologies, whatever is incurring that expense. Because it is going up slowly, but it looks like they're doing a pretty good job of keeping that on track, in tow. So yeah, this is going to be longer than I thought. I think that I'm going to break this up into a different video. Well, I'm not really sure. Why don't I just do this, and then we'll hit the top 5. How about that? We'll hit the top 5. God, I'm going slow. Alright, so income statement, we just looked at the balance sheet. So their total assets have gone from 41 billion to 56 billion 2023. That's the last year that we have for them. And then their total debt so it's going up, but it's far behind their total assets in 2020. I'm not going to say debt to income ratio. I'm not going to do that math, but I think it's easier. It's more clear to me. Debt to income ratio is great, but like, it's not even what this is. This is total assets to debt. But here we go. We got 41 billion and in assets and 7 billion in debt in 2020. And it has steadily gone up for total debt, but it's also pretty steadily gone up for total assets. Not climbing, well, about the same amount. 7 billion, 7.8 billion expenses 2020, 11 billion expenses 2023. So was that 4 billion more expenses, 41.2 billion in 2020 total assets, and 56.1 billion of total assets in 2023. So that's pretty good. That's up by actually that's a lot more, huh? That is 15 billion more in assets. So they're doing good at saving. I mean, if you were looking at somebody with this money, you'd be like, okay, they're good at saving money. Now there's two. It looks like there's Teck and there's Teck B. So I'll just read a quick thing about them before I jump off to Teck B here. But Teck Resources, a diversified mining company involved in coal, copper, zinc, and renewable energy products. So I mean, those are all great things for, powering Teck, I guess you could say, right? The energy production, the energy medium, the copper. Zinc, not sure what that's for exactly. Maybe for PCBs. No, doesn't sound right. I don't know. But we could look that up another time, huh? Alright, so Teck B. That doesn't tell me anything. We're going to the fish market. Well, it doesn't really matter, huh? Oh, okay, Teck B. It looks like it got renamed, maybe. Yeah, it's the same TECK company as Tor. So maybe that's Toronto instead of New York. Could be. Let's briefly look at what they have here, but it looks like they're doing good with their company. Okay. Yeah, operating expense isn't that bad. Okay, we'll quickly go over to this, see if they're, yeah, okay, it's kind of the same. Oh yeah, okay, this is the same numbers. So I think that at least for the total debt for their financials, they're booking it as the same thing. But it looked like the income statement was different. Yeah, let's just keep that with the top 3, huh? I am not going to do the rest of this, but so top 3 mineral stocks according to ChatGPT in 2024. I would agree. They're pretty good. I don't know if they're the top, but that's pretty interesting learning right there. So if you're interested in hearing more about stuff like this, I guess check us out, right? Other than that, if you have any questions or comments or criticisms or concerns, like, feel free to drop them in the comments. I will put the links to these in the descriptions. Yeah, talk to y'all later.